First of all, why do you think people are feeling generally more bearish, and why do you think they should be bullish?
I think there's a natural ebb and flow in the economy and in the community. And so Bitcoin surges up and has periods of extraordinary excitement, generates a lot of adrenaline and enthusiasm. Then there's a celebration, and then people extrapolate straight line to the moon. And then it retraces a bit and consolidates. And then people think, well, it's going to bounce back really fast. And if it chops sideways for a while, there's always a natural human tendency to get frustrated. I don't think we have anything to be unhappy about. The truth is, if you zoom out and look at the 1-year chart, Bitcoin is like up 99%. Mm-hmm. It's like nearly double. So if you walked in up to anybody in the street and said, hey, I'm heavily invested in an asset that is growing up 100% a year, should I be happy or not? They would say, you should be happy, right? It's just that the way that it gets there tends to be a bit volatile. As for why, I think the why Bitcoin has been consolidating, building its support in the teens right now, is because you've got $2.3 trillion of Bitcoin that is unbanked. And so you've got a lot of people that own a lot of Bitcoin, but they can't get a loan against it. And because they can't get a loan against it, the only, at the point that you all of a sudden find yourself Bitcoin rich, but fiat poor, you don't have a lot of dollars, but you have a lot of Bitcoin, and you can't borrow against it, then you think, I have to go sell it. So I think Bitcoin's right now, it's like this Mag 7 startup where all of a sudden all the employees got insanely rich on penny stock options, but they can't borrow against them, so they have to sell them. And so they're selling, and then people are saying, well, why are those employees selling the stock? Is that a vote of not confidence, in the company? And the answer is no. It's just they have kids to go to college. They want to buy a house, right? They want to live comfortably. They want to do something for their parents. And so right now, I think that the selling is crypto OGs that have had a lot of money for a long time. They're selling 5%, diversifying. They're doing something like that. And the market is absorbing all of that energy, building its support. The volatility is coming out of the asset. That's a really good sign. But because what you want for the asset to mature is for lots of long-term capital holders, the big corporations, the big institutions to buy. You want the early OGs that bought Bitcoin for $1 or $5 or $10 to sell some, or as much as they need to, so they feel comfortable. You want the volatility to decrease so the mega institutions feel comfortable entering the space and size. And the conundrum is, well, if the mega institution's going to enter, if the volatility decreases, it's going to be boring for a while. And because it's boring for a while, people's adrenaline rush is going to drop. And it's like they had this big high and now the adrenaline is wearing off and they're a little bit bearish. But this is just a growing stage, or natural for the life cycle of an asset that's monetizing like this.
I've been to some events recently with TradFi folks, and it's always the same reasons that they bring up of why they're not investing in Bitcoin. It has no cash flow. Some of them actually who work in finance share that they are prohibited from purchasing Bitcoin. Can you speak a little bit to that and how much progress you think we've made in terms of the TradFi world and what needs to change for more people to embrace Bitcoin?
Yeah, I think there are a lot of assets, the greatest property assets of Western civilization, assets like diamonds, assets like gold, assets like old masters' paintings, assets like land, the Louisiana Territory, California, Mexico, all of Alaska. None of them have cash flows. Right. All of the great things we've acquired in life. Truthfully, if we think about what we want in life, whether it's a spouse, a marriage, kids, they have no cash flows. A house, no cash flows. Right. So the world's full of things, right? A Nobel Prize, no cash flows. Fame, no cash flows. Yeah. yachts and jets don't have cash flows either. So the world's full of things that are deemed valuable in the world. They have no cash flows. And of course, as we know, the perfect money has no cash flows. The whole definition of money, a liquid, the most saleable asset. But if you want something to be money, you want it to have no utility value. Gold is better than silver because it has less utility value. And when copper, or when you find something like silicon that has utility value of some sort, it becomes worse money. And so I think probably people say, they say, well, we don't really think this is good investment asset because it has no cash flows. That's an opinion that has developed in 2 generations. Certainly since 1971, in the period, from 1971 on till today, I think the world developed a view, and its view was, long-term capital is a 60-40 mix of bonds and equities. And bonds had some dividend yield to them, and then bonds had some coupon, and equities had some dividend yield or some earnings. And that's just the way they saw the world. And eventually, the S&P 500 became the monster. If you look at index investors, 85% of indexes are invested in the S&P. So many people think long-term capital, what they think of as money held for the long term, is an equity index like the S&P index. Vanguard, they commercialized this, and they made famous the idea of the Vanguard 500 and the Vanguard Index Fund. So when organizations are hyper successful with an idea, like 500 stocks in a fund, and when the entire institution, right, the S&P or Vanguard or mutual funds, when they're built on that idea, when a disruptive new idea comes along that's even better, it's not natural that they would embrace the disruptive new idea. They're kind of stuck in their ways. As a practical matter, in a world of that's U.S. dollar, the U.S. economy is growing, and the dollar is the king of the world. It's the world reserve currency, and there was no world war after World War II, right? Mm-hmm. So we haven't had a massive disruptive world war. Then you're living in a very particular situation, a particular time, and you could fall into. In calculus, we call it a particular solution to a differential equation. If all of the boundary conditions are set, and if this, 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 then you can just plug in this number and you'll get out that answer. And that is true as long as you don't change any of the boundary conditions of the assumption. If you've got the solution for aluminum, and then I change the metal to steel, then the formula doesn't work. Mm-hmm. So at that point, you can't use a particular solution. You have to use the homogeneous solution. You have to be not the engineer, but you have to be the physicist. You can't be the trade craftsman with the simple lookup table of the answer. You actually have to derive it from first principles. So what you see is most people have never in their life had to derive anything from first principles. They've used the particular solutions given to them by someone that taught them the answer. And that breaks down when, for example, your entire currency collapses. For example, if you live in a economy where the currency is collapsing, like Lebanon, and they freeze your bank account and the currency goes to zero, or anywhere in Africa, or if you lived in Argentina when the currency collapsed, then if you actually owned anything with cash flows, they're all worthless. So the irony, of course, is one of these good traditional safe assets that generates cash flows. Well, not in Nigerian currency, not in the Bolivar, not in the peso, not in the Lebanese currency, not in the Iraqi or the Afghani currency. I can give you not in a Russian currency, before the collapse of the ruble that took place at the turn of the century, 96 or something. So the people that have these ideas, they have a particular set of solutions that work in a very stable, closed ecosystem that's never been challenged either with external stress or never encountered a new idea. When the people that will get Bitcoin will either come out of very chaotic environments, collapsing currency environments where they had to think for themselves, or they'll be at their base kind of scientists, first principles thinkers, people that question everything and rederive it. So I think, the great irony is, again, the CEO of Vanguard saying Bitcoin is not an investable asset because it doesn't have cash flows, and then the largest shareholder of my company being Vanguard.
Ironic.
The most ironic outcome is most likely, according to Mr. Musk.
Let's zoom in on bonds as an asset class and maybe give a little master class for the mainstream audience about how you're revolutionizing the credit markets. I want to first start with just what problem did you identify in the fixed income world that you thought could be solved with Bitcoin?
Yeah, credit. If you look at the credit markets, you got mortgage-backed credit. Mortgage-backed securities are 1.5 times collateralized, and they yield like 2, 3, 4%. And then you have fiat credit. It's credit backed by the promise that the government will print more money, and that sets the risk-free rate. That credit, in Japan generates 50 basis points, and Switzerland generates minus 50 basis points. In Europe, 200 basis points a year, and in the U.S., about 400. It just got reduced by 25 basis points yesterday, right? So you have that kind of credit. Then you have corporate credit, and corporate credit is backed by the cash flows of companies, whether they're good companies like the Magnificent Seven, like Microsoft or Apple, or they're junk bonds, or they're struggling companies that are struggling to stay in business. Those credit spreads can range from 50 basis points all the way up to 500. But that means that when you're buying corporate bonds in Europe, you might be getting 250 basis points a year in yield, 2.5% interest. Well, the real monetary inflation rate is greater. So all of these countries, Japan, Switzerland, Europe, the US, they're all suffering from a form of monetary repression where the natural risk-free rates or the fiat yields are less than the monetary expansion rate and the rate at which scarce desirable assets are appreciating. So that's one challenge. The other challenge is those instruments are illiquid. Sometimes, like all preferred stocks, they're very hard to trade. Sometimes they don't trade at all, and they're under-collateralized. So what we observed is the credit markets are weak. They're unhealthy, is how I would say them. If you live in Switzerland and someone is willing to give you zero or take 50 basis points of your money every year you have it in the bank, and that's the offer, one can't characterize that as anything other than weak. Yield starved is another way. And so a lot of markets are yield starved. And on the other hand, most people, like in the conference the other day, there were 500 people in the room. And I asked them, how many of you have a bank account? Everybody's got a bank account. How many of your bank accounts yield more than 4.5%? None of them. How many of you would like your bank account to pay you 8 or 9 or 10%? All of them. Who's offering that? Nobody. What we see is the opportunity in the market is, unless you have Bitcoin, unless you have a long-term store of value, what I'll call digital capital, and you're going to hold it for the next 30 or 40 years, no one's willing to give you a fair yield for the long term. Like, tell me who's going to give you 10% interest for the rest of your life?
Well,
no bank.
You are.
Yeah, we are. Right? The Bitcoin community is, right? Your bank won't, a company won't, a government won't, no mortgage-backed security issuer will.
And I think it's important to share why not? Why can't we get that kind of rate outside of what you're doing?
Yeah, it's because no company has a good enough business that they can be confident that they can generate returns north of 10% a year ad infinitum. Running a company is hard, right? Because no one with a home can afford to pay that. That's another reason. So at the end of the day, and because no government that has a strong position wants to, right? The strong governments that run the world that are stable don't wish to. They wish to pay you much less. And the weak governments, they are forced to pay more, but their currencies are collapsing and their government is collapsing. So you can't find a national creditor that would pay that rate. You can't, and most corporations, corporate finance strategy is not to issue credit and make it good. Their strategy is to avoid credit, to buy back their stock, right?
That's the conventional method.
They're very conventional. So what we discovered is Bitcoin is digital capital. Bitcoin is going up faster than the S&P forever, right? Once you actually acknowledge that Bitcoin is appreciating more than the S&P forever, and my forecast is it appreciates about 29% a year for the next 21 years. And I've shared that with the community. But you could have any forecast. But if Bitcoin is an asset and it's appreciating, then you can create credit collateralized by that appreciating asset. So Bitcoin's digital capital appreciating faster than the cost of capital. The cost of capital is the S&P 500 return. And then credit written against it or issued against it is digital credit. And the digital credit can have longer duration or it can have short duration. It can have higher yields. It can be in any currency because Bitcoin is a stronger currency, right? One of the keys in the credit market is if you're going to issue a credit instrument in a currency, you want it to be weaker than the collateral you hold. So if you issue the credit in a currency which is stronger than the currency you hold, you'll be upside down and you'll go bankrupt, right? And this happens, for example, when they borrow in dollars and they live in a country where the currency collapses, they're bankrupted, right? So what you want to do is you want to issue the credit in these other currencies. And so we can issue credit in yen or francs or Swiss francs or in euros or in dollars because all of those currencies are weaker than the Bitcoin currency, right? And so we discovered that we could take on any kind of currency risk. We can we can offer higher yields. We can offer yields like a distressed debt, like a company going out of business, but we can then over collateralize them so that they look better than an investment grade. Investment grade companies in the United States aren't 2x or 3x over collateralized. We can create 5, 6, 7, 8, 10x over collateralized credit. So we can create credit which is less risky. We can create durations which are longer. We can create yields that are higher. And because we can create those in perpetual instruments, we can take them public. And if we take them public, then they'll have more liquidity. And so the idea is, give me something which is smarter, faster, stronger than everything else, right? Make it more liquid, make it longer duration, make it, more collateralized, make it less risky, make it higher yielding, better performing. And the opportunity of any kind of Bitcoin treasury company is you have the world's best collateral. You have Bitcoin, digital capital. If you issue digital credit, you'll have the world's best credit. And that credit will then create amplification for the equity because whatever volatility and whatever performance you strip off of the credit will accrue to the common stock shareholders. And so you create amplified Bitcoin in your equity. You create domesticated low risk, low volatility Bitcoin with yield. That thing that doesn't have cash flows, we give it cash flows, right? I mean, the irony, of course, is, a lot of these traditional credit investors, right? The people that want to invest in cash flows, they'll invest in the bonds, or they'll invest in the bonds or the equity of a company which is losing money, or that has cash flows that don't even meet the cash flows that they're collecting, but at least it's cash flows. So what we're doing is we're giving Bitcoin cash flow. We're making it credit. That way it goes into credit indexes. And then we're creating equity, which outperforms, and that goes into equity indexes. And both of those two things raise capital. They're both gateways for capital. The capital flows into the Bitcoin ecosystem, and then we buy Bitcoin, and that finances and powers up the Bitcoin network.